It's time for us to hit our hashtag segment and to hit social media. For that, we'd like to welcome in Andy Swan, the co-founder of LikeFolio.com, and we have Fast Market contributor Jenny Horn with us as well. And as I said, we're going to talk some Domino's ahead of their earnings release, Jenny. So let's get it started.
Us Chicago people love to talk about pizza. I know this is something that all makes us, we all are passionate about our pizza options, but you know, Domino's I think is frowned upon because we get our Chicago pizza, but it's a really great option. I know that you're upset about that, Kevin.
No, surprisingly, I have Domino's more than you think because my children liked Domino's growing up. And
something about it is
as
so
much
good.
as they like the pizza, they like the cinnamon sticks and all the other bread. Basically, it's anything in the bread family.
Right, and with their new CEO, they came out and they had a bunch of different options. Like now they have salads and wings and a more diversified palette, if you will. But they're coming off the heels of several disappointing quarters, and now they're closing on record highs. So this could possibly be the earnings quarter we see them post a beat. The Wall Street is very optimistic about this, as you see at that chart. I mean, they're just doing a crazy job as of lately, along with, of course, the broader market. But this is a name that's really trying to embrace tech to compete with, you know, your DoorDash, your Grubhub, your Uber Eats. And the delivery space is a space where consumers are only getting pickier, I think because they can. So that goes into kind of my first tweet, which says, I didn't even complain about a long delivery time, and Domino's sends me a free pizza out of the blue. Had such a bad Papa John's experience a few months ago that I sent a complaint and never heard back. What a difference. So I completely agree. Domino's has a great delivery service, but Andy, I know when it comes to your happiness, you see a little bit of a different picture, so tell us about that.
Yeah, when it comes to consumer happiness for LikeFolio data, what we're looking for are people who actually go out of their way to mention whether they're positive or negative on the experience that they had with the company. And so for Domino's, that's been on the decline for quite a while, for the past 4 or 5 years, off of some pretty impressive levels. It's nothing really to be worried about unless we see another leg lower. I think right now it's just kind of the market finding itself. There's just more and more pickiness in the market in terms of what consumers expect from these delivery companies and just delivery in general. And so I think Domino's is suffering from that. It's being compared to a lot of different competitors now. And so, you know, going forward, we see Domino's is in a pretty decent spot, definitely better than they were 10 or 12 years ago, probably the best turnaround of any company that I can remember in a long, long time. And, you know, the consumer happiness dwindling to these levels is a little bit concerning, but something we'll definitely keep an eye on going forward.
But Andy, here's the thing. When you look at something like Domino's, who have really mastered delivery, and the delivery space, and now you've got all these new people into the delivery space, and it feels to me like as these delivery companies are going through some serious growing pains, where Domino's, even though they may have a product that some people you either want or you don't want, you're either happy with or not happy with, Domino's Pizza is still a serious technology company when it comes to their delivery system, and they are all in terms of making sure, at least from delivery, you have a happy experience. I don't know if you're getting that from other places, and so at the end of the day, you know, like I said, it's not apples and oranges because you're delivering maybe steak from somewhere else or burritos in terms of pizza, but Domino's Pizza in terms of delivery is the gold standard. Am I wrong with that?
No, I don't think you're wrong. I think that Domino's is placing a very careful bet on their ability to deliver their own product to the consumer directly and not giving that to the hands of these third-party apps like a Grubhub or an Uber Eats. You know, that leaves them out of the conversation a lot of times when people simply bring up those apps and say, what do you want to eat? But when you're making the decision for pizza, Domino's is winning that mind share by having a great digital and delivery experience. And so it's really, how do you want to bet for the future? Domino's is betting on their own ability to deliver and to create technology that delivers a consistent product and not get into this yellow pages of delivery and allowing others to touch their product, whereas others are going a different route. But I will say, when you look at this consumer happiness chart for Domino's, yeah, it's down and to the right a little bit, but what's very interesting is that's a lot higher than what we see from the Grubhubs, from the Uber Eats, from these third-party delivery services, which have some of the lowest consumer happiness ratings in the entire LikeFolio universe.
That's wild to me. We talked about with Landon how the wait times differ and how that really affects consumers' happiness. I think that was Grubhub was one of the slowest, which I could stand by and say that's absolutely true. It's like he said something of 60 to 75 minutes, which is crazy. Why are you even waiting for your food at that point? You should just go get it, which is, of course, no one wants to do that. But I like that you all mentioned this tech play because that actually goes into my next tweet, which says, no wonder they say Domino's is a tech company. They don't offer heart pizzas, so I ordered from a different place. Page loads took 10 plus seconds. Address selector wouldn't load unless I enable notification services. Email and order confirmation are broken. Domino's lets you track per minute. I thought this was so interesting because, of course, it's just praising Domino's for their tech capabilities on their app and online, and that's really cool, of course. But Domino's CEO came out and said, we're not going to get a part of this third-party delivery. We're not going to do this Uber Eats, this DoorDash, this Grubhub, and they were punished for that initially, but now it seems like they've kind of come back. So, I mean, what does that mean for the long-term growth, Alex?
I think that the real thing is this is obviously done at a cost, Kevin. So, they're not doing this for free. They don't have all this, tech overhead and this app and all this stuff. And obviously, the first tweet brings up the fact that they're sending free pizzas if they don't deliver. It's all brand management and keeping their consumers happy, but they do this at a cost. But I think it's important for their brand. But Andy, I have a kind of a question. Obviously, we know the trend in kind of generic food delivery and really everything is kind of going up and to the right in terms of more and more people are delivering or ordering through these apps, whether that's Grubhub, Domino's, or whatever it may be, and delivering food. Is that a good thing for pizza companies like Domino's because more and more people are just going to buy stuff and having it delivered, or is that actually hurting pizza companies because they're not the only option anymore?
Yeah, I think it's both. And what's really interesting about it is, we've got year over year, generic food delivery, like you said, up and to the right. You can see this with this LikeFolio macro trend view here of just food delivery in general. When you look at pizza specifically, it's something like up or down 3%. It's really not moving very much. And so I think the competitive landscape is certainly expanding. I think that more and more people are getting their meals delivered, but that's not really rising the tide for all ships, and that's not really rising the pizza tide. And so what it's done is created a lot of competition for the Domino's of the world. And I think that they understand that, and they see that their pathway to success could be in maintaining control of that consumer experience all the way from when they open up an app on their phone to order all the way through the pizza getting to their door. And so that's the bet they're making. Whether it pays off, we'll have to see. I think going into this report, we've got Domino's kind of the same story as prior quarters. We think that Wall Street's growth expectations are probably a little rosy in terms of outlook. The bearish case is probably a little bit more the style I would be playing it, but there's not a whole lot there. I think that pizza in general is, a healthy industry, and food delivery is booming all around them.
Andy, here's my issue or question. You tell me if it's legit, because you visit Chicago frequently, and Chicago is a local pizza town, right? A lot of people order very regionally and close to their home, where Domino's is a national chain. So our sample size, or the way we look at this, might be skewed because we are a local pizza town. Are we skewed in the way we view Domino's versus maybe possibly the rest of the country?
Oh yeah, I think so. I think that in a bulk of the country, what people see with Domino's is a really safe bet that'll get there in 25 or 30 minutes, that the kids will like, that the adults can eat, and everybody can move on with their day. It's not the experience that you're going to get with a Lou Malnati's, and it's not going to, have that type of flavor profile either, but it is a nice, safe bet across most of the country, and people appreciate that on a general Tuesday night. And so I do think that the threat to Domino's is real, and that is that those local pizza favorites, or those local restaurant favorites in general, are now available for delivery to those same consumers. So pizza's not the only option in town anymore, and Domino's really has to step up their game in order to just defend what they already have. And I think that's what they're doing now. That's why we see purchase intent mentions at LikeFolio not really growing along with the rest of the food delivery industry, but they are doing a good job of maintaining their brand and their relationship with their consumer.
Yeah, and we have that up on the screen here with you, Andy. Looking at that consumer purchase intent mentions, obviously you pointed it out, but those two red squares are going to be kind of the year-over-year numbers for similar quarters. It is fairly flat, but the stocks at basically its 5-year highs or all-time highs at the levels that we're at now. So is flat or down small enough to maintain this name going into earnings? Thoughts on what we may hear from the earnings release after the close? Or are you guys worried about this one, or is this one that you like?
Look, I'm a little worried about it with the stock near all-time highs. We don't see a whole lot of justification for that in the purchase intent numbers. I think they do have some headwinds that they'll have to face on the call. The executive team has gotten beaten up in the past for being dismissive of these third-party delivery rivals. I expect that they'll continue to do so. So I think that there is significant risk to the downside for the name going into the earnings call. But again, this is a company, from an execution standpoint, they've done such a good job of maximizing the profitability from the consumer base that they have and keeping that consumer base very happy. It's kind of like a Starbucks story. They're probably getting more dollars per ticket. They've got a much more loyal consumer base than most others in the space. And so those are reasons why the stock could pop. And it's a tough call. I think if I had to lean, I would lean bearish just based on the fact that happiness is down a little bit, and we don't really see much enthusiasm on the consumer demand side, and a lot of competitive threats bubbling up around them.
Yeah, Andy, I know Domino's has a very good gluten-free pizza, so I know you'll be a fan when they have one day a keto pizza, baby.
Well, I already get that from Blaze Pizzas, so that's another competitor. These little pop-up that can do fire fresh pizzas in 3 to 5 minutes, and they deliver too. So there's more happening in the pizza space probably than meets the eye, and I think there's a lot of headwinds in Domino's direction, but this is a really well-run company.
All right, Andy, we got to leave it there. I misspoke. It looks like it's going to be tomorrow morning before the open for this earnings release, so we'll see what they say about those headwinds going forward with their guidance as well. But great stuff as always, Andy, and we'll see what happens.
Well, thank you.